morning, good afternoon, and good evening. Welcome to YPO on Facebook Live, where we'll spend the next 30 minutes learning about the future of cryptocurrencies and what entrepreneurs and business leaders need to know about this ever-changing and evolving decentralized system. We will be joined by 3 YPO members with different experiences within the cryptocurrency space to cover all aspects of this nuanced topic. For our friends watching on Facebook, to ask a question anytime during the session, make a comment in the comments box. Any questions we don't get to during the broadcast, we will follow up afterwards. And now I would like to welcome our panel. Yoni Assia is the founder and CEO of eToro Group and is based in Tel Aviv, Israel. eToro is a social trading platform offering a wider range of tools to invest in cryptocurrencies, stocks, commodities, ETFs, and more. Also joining us today is Zoe Cunningham, the managing director of Softwire, a software development and consultancy house, specializing in bespoke enterprise systems and subsystems across a wide range of industries. And our third panelist is Hervé Loren, co-founder of Global Crypto Ventures, a cryptocurrency mining company that produces Bitcoin, Bitcoin Cash, Ethereum, Litecoin, and Dashcoin. Yoni, to kick off the conversation and call, is going to provide a brief overview of cryptocurrencies.
Hi, everyone. So I've been asked to give a short, brief history of Bitcoin and blockchain. I've been in the space since 2010. I'm what you call a Bitcoin or crypto enthusiast. And we have today in eToro more than 10 million registered users who use our platform to see, follow, copy other users on the platform and trade various assets. I'm going to start very, very briefly with sort of how important money is in the technology of money and the formation of capital to the global economy, and then dive a bit into the technology, though we won't have time to really explain how Bitcoin works or how crypto works to anybody who doesn't understand in 5 minutes. So first of all, what is this invention and why is everybody talking about it? And really from the macro level, a big part of human society has always been the exchange of basically value, from lending to collectibles to basically gold 5,000 years ago. And if you think about precious metals, that was basically a technology used to create basically some common value for people to interact and exchange goods beyond basically their own village. And what's really important to understand about sort of the invention of gold as the base of money is that helped basically create initially global commerce. Now, for the past couple of 100 years, we're living in sort of a status quo of fiat money. That's how crypto enthusiasts call regular money, or dollars and euros and pounds, which are issued by governments. And that also had a process and changed over the last couple of centuries, where it did work in parallel with private money, but gradually has become more and more dominant as the only type of money available is actually government-issued money. And government-issued money is usually through either the forms of cash or through the form of basically enabling banks through regulation to basically take deposits and give credit. And if you think about the qualities of money, and this is really based on sort of research, very, very old research in economics, but the qualities of sound money, or specifically gold, is based on these 7 parameters. Gold is scarce, it's divisible, it's portable, it's durable, it's recognizable, and it's fungible. Where fungible basically means every gram of certain level of gold is equal in value to every other gram. And all of these basically functions or qualities create basically sound money. And what I'm going to try and explain is why most Bitcoiners in the crypto community basically believe that Bitcoin can replace gold or become digital gold because it has the same qualities of sound money. And what a lot of the people sort of in the inside in the crypto community are thinking about is that this invention, which is a very big invention, but it's in core, it's the first time people can actually own their own financial assets. So we traditionally are used to own financial assets with financial intermediaries, usually regulated financial institutions. And basically anything we own is a sort of debt from that financial institution to us. So when you own dollars in the bank, the bank has those dollars in theory in their balance sheet and they owe you those dollars. When you own Bitcoin, you actually own a private key and you own it to access those Bitcoins, and you can transfer them without any third party or any central authority. And that's the idea that people are talking about in decentralization. And a lot of the crypto community basically believe that cryptocurrencies and Bitcoin is now the beginning of basically a new economy based on these new native digital assets, which, by the way, most of central banks and most of financial institutions would now agree that the underlying technology driving this, which is the blockchain, which I'll let Zoe talk a bit more at length later on, is disruptive to traditional financial services even without the crypto part. So this new technology basically enables finance and every financial institution to operate much more efficiently and on a global scale than ever before. Now, Bitcoin on its core, it's really a technology. It's sort of the first of its kind. So Bitcoin was the first public ledger or blockchain that worked. Today, there are many more. And it's in its core, basically, technology invention. I actually believe this technology invention is as big as the internet invention, or specifically TCP/IP, and potentially as big as the invention of transportation, electricity, and some people would even go and say of reading and writing. So what is the core of this technology? The core of this technology is basically a public ledger, where each person can have one or multiple accounts. Each account basically is derived from a public address where people can see how much money is in that account, or how many Bitcoins are in that account, and can basically transfer Bitcoins into that public address, and a private key, which enables only the person who owns that private key to access that address and to move assets from it. And everything is basically on one public ledger, which is called the blockchain, which I'll try to explain in a second. It's called decentralized because the ecosystem itself, so if you think of Bitcoin or Ethereum, they're derived of many different nodes. So basically many servers that run the same code. And what that code does, it basically protects or secures the Bitcoin network to make sure that everybody sees the same public ledger. And when you transfer someone money, someone Bitcoin, that transaction is basically secured by everybody running nodes and mining. Later on, we'll also hear a bit more about mining. The reason it's called the blockchain is because every block, basically, it's a chain of blocks, which basically creates something very similar to a database, where each of these blocks contain all of the transactions that happened since the last timestamp. In Bitcoin specifically, every roughly 8 minutes, a block is produced. The way it's produced, everybody's constantly, all of the nodes, so everybody who is running a node, which could be anyone, is sending all of the transaction that they heard to everybody else. And the nodes are collecting all of these transactions into a block. Then you have miners, which basically one miner, so there could be thousands of different miners. And what these miners do is they basically compete to try and sign the actual block, which will be the next block of the blockchain. So if at one point, all of us here on the call had 1 Bitcoin, and I transferred to Zoe half a Bitcoin, we transferred now this message through the nodes to a miner. And when one of the miners basically compete who will be the first miner to mine that block, once he did that, then everybody in the network can see, I actually transferred half a Bitcoin to Zoe, therefore she has 1.5 Bitcoin and I have half a Bitcoin. Again, what is being mined is blocks that are being signed of all of the transactions, so everybody agree on what is the next block, or what are all of the transactions that have happened since the last block to the current state. And throughout this process of mining, and the way to incentivize people to install machines that do mining of different blockchains, and specifically Bitcoin, a reward is being given to whoever mined the blockchain. So to whoever competed on this algorithm that was able to mine the block, he receives today 12.5 Bitcoins, which are worth about $70,000. So every 8 minutes, people basically receive about $70,000. This distributed ledger is basically the history. So when you look at the blockchain, it's a distributed ledger of all of the history of all of the transactions that ever happened in the Bitcoin network. And it enables you to see every single address, how much Bitcoin it has. So it's an extremely transparent system where you see for every address, all of its history and how much Bitcoin it has. And anyone has access to see basically all of the Bitcoin addresses out there. Of course, no one, and that's why it's called a pseudo-anonymous, no one knows who holds these Bitcoin addresses. So I might own one address or 50 different addresses. Nobody necessarily knows who owns the addresses. Of course, now when tax authorities are gradually gaining more interest, local tax authorities are supposedly gaining knowledge to who owns different cryptos. In Israel, they are actually going into the process of actually asking for the addresses themselves. So this was a very quick overview to the blockchain. We'll get more from our participants on the call and hear a bit more about mining and blockchain itself. But again, the very high level is this is a new technology. And just like the internet created a free flow of information between numerous participants around the world, basically blockchain is doing to money what TCP/IP did to information, creating the internet of money. Now that's the technology itself. And the technology itself, the first use case was Bitcoin. Bitcoin basically created a currency or a cryptocurrency that people can move from one place to another that's created through the mining process. If you look at the basically books of economics, you see that the definitions of money, there's three functions of money: store of value, payment mechanism, or medium of exchange, and unit of account. Store of value basically means you can hold money in Bitcoin today, so you can transform fiat money, dollars, into Bitcoin and hold your Bitcoins. You'll hear her later on saying you need to do that with at least 5% of your net assets. It's a medium of exchange by definition because every person who owns a wallet and owns Bitcoins can transfer them to any other address in the world. And today it's actually an effective unit of account because for every regular currency in the world, you can actually quote it quite easily in Bitcoin. So anything that is quoted in shekels, dollars, reals, euros, pounds, or yuans, you can actually also understand how much does it cost in Bitcoin. So today in our 24/7 reality, Bitcoin actually can serve also as an effective unit of account. And I won't go into all of the details, but Bitcoin does have all of the qualities of gold. It's scarce. There will be only 21 million Bitcoins ever mined. So there's a limit to how much Bitcoins will ever be. It's divisible. You can take Bitcoin and divide it, if I remember correctly, to 12 decimals after the period, which means you can send 0.000001 Bitcoins over the Bitcoin network. Of course, it's more portable than any physical assets. It's durable because it's decentralized. It doesn't have a single point of failure. So even a country can collapse, Bitcoin will still exist. You can basically not really destroy Bitcoin today. It's recognizable because it's computer sciences, it's math. So you can recognize it basically through the protocol of Bitcoin. And it's generally fungible. Every single Bitcoin is worth every other single Bitcoin. Now, this was basically a very quick overview of what Bitcoin is, why people consider it money or digital gold. But the bigger revolution is really what blockchain brings us, which is the internet of value, which will enable basically commerce to transact without borders. and in theory also, which is very interesting, to enable computers to actually have their own wallets and to transact with one another, which is a whole different realm of innovation in the blockchain space. Now, blockchain and the cryptocurrency community is much wider today than Bitcoin. Bitcoin was the first. It's the highest market cap, but today there are more than 2,000 different cryptocurrencies. This is an old presentation. You can see I wrote more than 1,000 since then. Another 1,000 have been added. On eToro, for example, you can trade only the top ones, the ones that are worth more than $1 billion. But all of those cryptocurrencies also significantly have risen in value in the past couple of years. And I won't go into all of the details unless we won't have sufficient questions to explain all of the differences between the different cryptocurrencies, except one which I think is very interesting, which started what happened last year, which is Ethereum. Ethereum is a second generation cryptocurrency. So everything that I explained about transferring of value in Bitcoin, all you can do on the Bitcoin network is basically transfer Bitcoins from one wallet to another. A very, very smart person called Vitalik Buterin, which actually worked with me and worked for a very short while in eToro on the Colored Coins project, came up with a concept called smart contracts and created a blockchain which, instead of holding only Bitcoins or only Ethereum or Ether in the case of Ethereum, it actually holds contracts, which are Turing complete contracts, which mean it's code that defines any type of financial transaction or any type of anything you can define in computer code, you can define as a smart contract, which means on the Ethereum network, it's not only about replacing gold or being digital gold, but it's really about creating an ecosystem where there are numerous tokens or cryptocurrencies and people can actually sign deals on the Ethereum network with a smart contract, and that contract can actually be transferable and moved on the network itself. And what the Ethereum network created is actually a huge proliferation of different tokens, because the killer app on Ethereum was one single smart contract called basically a standard ERC20 token, which enabled founders from all over the world to, instead of raising capital traditionally as raising money to your company and giving shares, there has been more than 1,000 initial coin offerings or ICOs, which are very similar to the concept of IPOs, but instead of selling shares and being locally regulated and then trading on regulated exchanges, ICOs basically are tokens, or people are selling a new currency for fiat money or for Ethereum. And once they sell it, basically, it starts trading on numerous exchanges like eToro out there. So it's immediately liquid. And that really created about more than 1,000 different companies that raised money in this type of smart contract and led to basically a new formation of capital. And I'm sure a lot of people here read about what's happening in the crypto markets and heard about the concept of people raising money to their startups instead of as in equity, but in coins. So this is a very quick overview of the cryptocurrency market. And since we have here Herve, who is running a mining company, let Herve maybe give 2 minutes quickly, 2-3 minutes about mining and how mining works and why people are mining and how they're making money out of mining.
Yeah, thank you so much, Yoni, and great presentation. So first, let me introduce myself. The first time I've been involved with Bitcoin and accepting it as a mode of payment was in 2014. I learned about it 2 years ago, actually in the middle of the desert at the Burning Man Festival, where there was a group of anarchists talking about a plan B if the world collapsed. So arriving obviously a few years after the white paper of Satoshi Nakamoto got released to the world. And that got me intrigued. And what got me intrigued was at the same time the technology of it that we've been talking about. But I think also one of the major success of Bitcoins and other cryptos is the failures of our conventional systems. I think that each time that you had the devaluation of the yuan, there's about $1 billion market cap of Bitcoin that comes that is created. When countries collapse, and of the 193 currencies in the world, the bottom 30 collapse, I think you have billions of people that need to find another mode of making payments. So in terms of the mining, our vision is to be the Amazon Web Service of blockchain. So what we do is that we validate the transactions within the system. Now it has a very business-like approach. We are not speculators. We like to have passive income that we can monitor, a little bit the same mindset of a real estate type of operation. And what we realized looking at the transactions of Bitcoin when it was a few $100s, is that there was about 250,000 transactions on an everyday basis, that the value of a network like the Bitcoin network was not a linear type valuations, but rather applying the Metcalfe valuation, which is basically N square, which is basically how you would value a network like Facebook, like a $19 billion acquisition of WhatsApp, or an Instagram. And we realized that the potential of this network was very big. So what do we do as far as miners? Well, we mine the largest market caps in the crypto world, the top 5 largest mineable currencies. And we also have a few smaller ones that we believe have a large potential and big payouts from a mining standpoint. So people from all over the world come and see us. We basically arrange the entire process for them, whether it's buying machines, setting it up, making sure that they get paid on an everyday basis on their wallet. And what we realize is that it's profitable from day one if it's managed at scale. And we're lucky enough to have it managed at scale. When we talk about scale, we're talking about 15 megawatts type infrastructures that can hold about $100 million worth of equipment. And within every asset class that we see out there, we believe that this is an asset class of the future. Our thesis is that 1 to 5% of every individual should have, every individual should have 1 to 5% of their net worth in cryptocurrencies. And that, that is happening during the good times, but mostly as a hedge when times are bad, when crises are going to happen. And when we look at the fundamentals of the economies right now, and everything seems, rainbows and butterflies, stock market is at an all-time high. Los Angeles, where I spend most of my time, real estate prices have tripled. But when you look at the underlying layer, when you look at the money printing machines and the inflation prospects, we're actually very pessimistic about the worldwide economy. We think that difficult times are going to be ahead, and that individuals are going to look for asset classes that are uncorrelated to any others, and we believe that is going to be the next large growth in cryptocurrencies when hard times affect other asset classes.
Perfect. Can you explain a bit about how mining works? So what are you buying and how are you generating cryptocurrency?
Yeah, so there's, I would say, 3 main aspects into the mining. The first is getting the best possible machine, the best possible equipment. So what mining is, and it's a little bit the gold, the 2.0 analogy, is to find the best equipment. So there's large companies, mostly in China, that produce mining equipment that enable to process information as quickly as possible, what miners call the hash rate. And based on this, we have to plug it into the cheapest cost of electricity in the world. Basically, that's why we're at the border of Texas and Oklahoma, Because an unregulated market, which very cheap price of electricity is actually there's actually a surplus of electricity. We're not taking electricity that goes into large cities. That's why nobody mines in LA, New York, or London. You have to go in very remote places. And the third thing that really comes into place is a little bit like a Formula One car needs an experienced driver. Well, it's going to be the operational team, making sure that what currency to mine, if you hold or sell that currency, what the mining pool do you actually use? In other words, you don't mine by yourself, you buy in large groups, because when you find a block, it basically creates more of a steady income, where when you mine as a big group, then first one who finds a block shares it among the group. So that enables that steady income. And at the same time, looking what are the tendencies in the future, what coins we believe are going to be more profitable on an everyday basis right now, but also has a future upside. So, Bitcoin Cash. And the reason why we do Bitcoin and Bitcoin Cash is that it uses the same machine, the same ASIC machine. So it's easy to switch from one to the other, depending on which one is the most profitable. And same for Ethereum, Litecoin, Dashcoin, etc. So that, the interesting part about the mining process is that for us, it's an unspeculative process. We can see the returns on a daily basis. And what we like to do, and we feel that for the next 2-3 years before institutional money comes in the game and brings another 10x within the ecosystem, that we're betting on instead of betting on the horse, we're betting on the horse track. That would be a little bit like buying, if the internet in the 90s was a stock and you would buy the internet rather than buying Google, Amazon, or Facebook. We believe to invest in the horse track and under the protocol, and that if applications on the Bitcoin network or on the Ethereum networks are going to be successful, that means that the underlying the protocol is going to be successful as well. So we find from a risk-reward ratio, this is the place where we want to be.
Perfect. Thank you very much. Zoe, can you share with us a bit blockchain beyond cryptocurrencies, your thoughts and what you're seeing in the industry?
So my name is Zoe Cunningham, and I run a bespoke software development agency. So what we do is we take technologies, emerging technologies, and we use them to build business applications for businesses in a whole range of different industries. And the rate of development of technology in general at the moment is so high that there are almost countless opportunities for businesses to look at in terms of extending what they do, both to generate opportunities for themselves, but also to be aware of threats that are coming from other businesses that are developing more quickly, or new, even more so than other businesses, new players who are coming in with totally new technologies and changing the industry. So looking at the underlying technology of cryptocurrency, blockchain, Yoni, thanks for your great explanation earlier. I think that really helped people understand what it is as an overview, and it gives you a really good insight into the kind of business applications that it would be good for. So I've been meeting people who are using blockchain in totally different industries, but essentially to create a publicly verifiable chain of monetary transactions. So there's a company called Provenance who are using blockchain to verify where the goods that you're buying have come from and which hands they've passed through on the way to get to you. So if you think about goods that we buy where it's very important to us to know where it's come from. So for example, obviously our food and drink and things we put into our body for health reasons, it's important to know where it's come from. but also there's products for ethical reasons that we would be happier to buy them if we have a guarantee of where they've come from. Then this technology is allowing businesses to do that. The other area that it's really useful in is verifying transactions and verifying where your money's going. So both in advertising and in film, I know two different businesses operating in these areas where they're looking at where you're investing in something, where is the money that you're putting into the system, where is it going, what is it being spent on? If there's lots of intermediaries, well, who is taking which chunk of the money that
that's also very relevant for charity. I've seen a couple of things done on charity.
Yeah, where the whole system is very opaque to what you're putting in. And you as a financial participant in this want to know where it's either where your money is going, or in the case of film, if you've already invested, where the revenue's coming back to that film, where they're being distributed to, usually because there's not enough to you, and you're keen to understand why that isn't the case. So there's a fantastic opportunity here across really a whole range of businesses in completely unprecedented ways to apply this technology. However, having said that, YPO recently did a survey of the members of YPO about where chief executives are looking at investing in technology right now and over the next few years. And actually, the most popular technology was cloud. So really, I think around 70% of chief executives are investing in cloud right now. And the lowest was blockchain. So while this is a great opportunity, it's not going to be something that every business needs to use.
Right. So I think in general, we all agree that this technology is groundbreaking on a lot of different levels, and the applications are numerous. I think a lot of people who are more familiar with the technology definitely see this as big as the internet, and potentially even bigger, especially from a monetary point of view, from a financial point of view, even bigger than the internet. But it's still very early stage. So the applications that we're actually seeing, and therefore people who are outside of the industry, I think, they're not yet seeing sort of the big picture. I want to remind everybody that we'd love to get some questions. So I think YPOers are a bit shy. We haven't got a lot of questions, but we'll start going over them. So we're very happy to get more questions on the Facebook page. And I'll start from the first question. I'll read it, and then any one of us can sort of answer it. How would cryptocurrency be regulated and controlled in order to guarantee global financial stability? Herve.
Wow, okay, so I'll try to do it under 30 seconds. Bitcoin cannot be regulated. You can regulate the edge of it, but the algorithm created in 2008, 2009 has its own set of rules. What Bitcoin believes is cryptography, encryption, and the largest network of computer in the world. Regarding the edge of Bitcoin and the regulations which will come, let's put it in three different categories. The first one is to avoid basically issues, scams and other situations where money gets stolen. I think the custodian approach is something that needs to be regulated, because when you have centralized systems, the tendency is that the money disappears. Now, Bitcoin has never been hacked. Bitcoin has never had any money stolen. The money was stolen was from private exchanges. The reason why we do our mining operation in the US is that the US is actually a very crypto-friendly country. There's 16 agencies in the US. A lot of them, like the CFTC and the CBOE, already accepted Bitcoin futures and already allowed it. the governor of Gavin Newsom, who was the mayor of San Francisco running for governor of California, is accepting payments as a mode of, is accepting cryptocurrency as a mode of financing for its campaigns. So we do not see any issues in the US for, in terms of the regulations of cryptocurrency. It's gonna come. The only regulatory body that's very sensitive about it, which it's for cryptos, but also for any other industry categories, is the IRS. The IRS wants you to pay your taxes. Now, whether you have a pizzeria or you're a crypto trader, the rules are the same. But as far as other, I think it's the regulations is something for institutions who really look for a way to, I would say, protecting themselves if everything goes badly. We'll need to have a set of rules, especially from the custodian aspect of it.
Perfect. So to add and summarize, cryptocurrencies like Bitcoin, which are decentralized, cannot be regulated or controlled. What can be controlled is financial firms or regulated firms like eToro, for example, we're a regulated financial institution. In the way we deal with cryptocurrencies, we have to report to the different tax authorities. We have to make sure we have anti-money laundering processes and compliance processes. So we as a securities firm look at Bitcoin and treat it as a security from a regulatory point of view. I think that other firms that deal with cryptocurrencies locally will probably eventually get regulated, but the coin itself and the ability to transfer it from one place to another, that simply cannot be regulated or controlled by the definition of how it works. Let's jump to another question. Let's jump and then we can do a summary. You want to add something, Herv?
No, I was saying just purely from a repression standpoint, the only way to control it or to shut it down would be to shut down the internet, which I believe the chances will be slim.
I agree. Anyone else on this call working on blockchain-based digital ideas or on public sector use cases? A question from Peter Johnson. So I'll comment myself, answer myself, and then maybe let Zoe and Herv if they want to add. We at eToro are working on a project called Good Dollar. And the concept of that project is about basically enabling more people to access cryptocurrencies and trying to create a universal basic income cryptocurrency. And a part of that is about creating digital identity. So there are numerous projects in the crypto space actually dealing with crypto UBI, with creating universal basic income as cryptocurrencies, but also multiple projects that deal specifically what's in the crypto space called sovereignty or sovereign identity, which is how do you put your identity on the blockchain to basically remove both potential fraud, anti-money laundering issues. So how do you connect a digital identity into the blockchain? The biggest ones, by the way, are Uport and Civic. Civic actually did an ICO. You can go and search for them. And there are actually numerous projects in the digital ID space. Public sector space, I think the more interesting ones are the ones in the universal basic income space, but I have seen several other examples of public sector cryptocurrencies as well. So cryptocurrencies for charity, etc. Zoe, anything to add on that?
So I don't have much to add. I also know of a few people working on digital ID projects because I think this is there's such a big need for it, this ability to prove yourself online. And again, this obvious potential solution in blockchain. I don't know of any public sector projects.
Perfect. Another question. Can documents, resumes, or house titles be divided into blocks and stored on the chain, would they then be a currency? From Frank Canna. And the answer is yes, there are at least 5 different companies who did or doing ICOs, so companies who put their mission to create blockchain for property or to represent property like real estate on top of the Ethereum blockchain. So in theory, in the future, in all of these, you can actually take your, your apartment, register it on the blockchain, and then sell 5% of your apartment on the internet. So there are a lot of projects doing that. Tokenizing the space is called tokenization of assets in general. And you're asking about tokenization of real estate. So there are such projects out there, but they haven't, we haven't seen any of them sort of still become significant. They all just recently raised money in the past 12 months. Anything to add? From Christopher Perez, are we still at the ground floor of the crypto boom? Irv.
Yeah, I mean, so to give two data points. Bubble in crypto, and I think that's a little bit related to that question. Is it a bubble, and where are we at in the bubbles? Obviously, the bubbles are always easier to find in retrospect than when you're in the middle of it. When you look at it, we're talking about a worldwide phenomenon that is Bitcoin, and I'm just going to focus on Bitcoin for that question, of a market cap of, let's say, $200 billion. And this is a worldwide phenomenon, knowing that the vast majority of investors, there's really 4 categories of investors. The real category that has been very strong in this has been the retail Asian clients. So they have been taking the most position within that field. I believe that when you look at the internet bubble of 2001, of the dollars of 17 years ago, we were at $6.7 trillion, which one would argue might be double the amount if it was in today's dollar. And that was mostly a US phenomenon. So the fact that Bitcoin at a $200 billion market cap takes the first page of every newspaper in the world, and that it has the possibility to take, I believe, 20% of the market cap of gold, about $2 trillion. There's another 10x, I believe, would be coming. And the reason is that most of the money in the world are held by 2 categories who are not yet in the space, which was individuals over 60 years old and institutions. And they're still all on the sidelines looking at it. And the people who are in that space is, your little, nephew of 18 years old who has been putting $200 on it. I mean, that's the vast majority of the people who are in this. Do you have a few individuals who have been taking large positions, but it's still extremely limited. So I believe that we're at the first inning of this. And I believe that it's going to develop itself as an asset class. Goldman Sachs has opened a crypto desk. Some of the large hedge funds in New York have also opened a desk, and they're looking at it very, very carefully. And the reason they're looking at it is their clients are asking, hey, what about that asset? We want to have exposure. And I believe that having 1 to 5% of your net worth within that asset class, and even with the volatility, when you add it to your portfolio, it actually decreases the overall volatility of your portfolio because it's uncorrelated to any other assets out there. So in terms of sound, asset allocation, it actually makes a lot of sense.
So perfect. I agree with everything he said. So just double down on that instead of me repeating. What are the countries or locations most favorable for ICOs? Sounds like the US is trying to limit ICOs, so people are looking at other places. From Patrick J. Sweeney. At eToro, we had 2 subsidiaries that we brought in external investors into. that actually did ICOs. Both of them actually did it in Gibraltar as a very friendly ICO jurisdiction. Malta is becoming very friendly jurisdiction for ICOs. Now, in general, in Switzerland, in the core was the original, also very friendly, but then also very expensive jurisdiction for ICOs. I think it's really a lot about clarity. So we have offices in Australia, Europe, UK, China, Russia, and the US and Israel for eToro, where I'm based. The biggest problem with the more developed countries is because it takes time to regulate, there's a high level of uncertainty. And if you look at countries like Gibraltar or Malta, or in Switzerland, it's actually interesting, it's specifically the canton of Zug, then they have been very proactive and created frameworks and regulations and rules that are very ICO friendly. So those are Singapore also to a bit of a lesser extent, and the rest of the countries is still much higher uncertainty. From Roger Ying, Herv, which jurisdiction are you finding the most interesting teams and blockchain projects? Are you buying into ICOs, altcoins? And as a VC, so I'm not sure you are a VC, are you looking to returns from equity or coins or double dipping?
Yeah, so we've identified an area of expertise, and we're sticking to it. It's a little bit the Warren Buffett principle, knowing that Warren Buffett is not very bullish on cryptocurrency, blockchain, and the internet, but I'm going to quote him. So what area we've established is that is within the mining category. Something that, you know, we're not going outside of our zone of comfort in terms of investing in ICO, altcoins, and other spaces. We like to focus on what we can concretely manage. And we're focusing on the 5 largest market caps in terms of mining certain cryptocurrencies. Now, if we want to be a little bit more, risk-reward ratio aggressive, we'll look at new coins that pays really high dividends in terms of, and let's call it dividends, in terms of mining, and this will be a little bit of the allocation of the portfolio where we see a little bit speculative, but we believe the risk-reward ratio is extremely solid. But we for the next I believe 24 to 36 months, we're betting, like I said, on the horse track rather than on a specific horse. And we believe that the foundation of building the Bitcoin track and the Ethereum track is the space where we want to be. And in the future, our objective is to like I said, be the AWS of blockchain, and have, which I believe would be the second category disrupted, which will be real estate, which is a $270 trillion global category. And we could be mining for real estate company. We can be mining for the NASA. We can be mining for the US government. We could be mining for Uber Elevate and their new, plane program. So, we see that as the decentralized engine that will power most of the technologies out there. And that's the place where we want to be. We're focusing on cryptocurrency first because people need to, the only universal language is money, and people need to understand money, understand, I did a talk in Kuala Lumpur, in Nepal, in New York, everybody understands the cost, the price of a Bitcoin. And I think it's difficult to start a category talking about insurance smart contracts, where you could, have a worldwide reference that is universal. So I think that's going to be the first category, financial industries, then real estate, and then we'll go down the chain in terms of, businesses that this technology will disrupt.
Yeah. So by the way, I am investing in ICOs. I think I invested in about 20 different ICOs. in general, there are very interesting and lucrative returns in ICOs if you have very good due diligence. So there's a couple of ICOs I made 3 and 5 and 10x within 2 months. But it is extremely high risk and much less liquid than the big cryptocurrencies like Bitcoin and Ethereum. While I'm not mining like Herve, I still think that if you own a crypto portfolio, and I agree with Herve, it should be 1 to 5% of your net assets. 80% of it should be in Bitcoin and Ethereum. And then the other 20% you can play with smaller cryptocurrencies and potentially ICOs. But the vast majority should be by the way, for Herve's example, simply the winning horses, and there's a very high chance that Bitcoin and Ethereum are the winning horses of this track. Christopher Perez, thoughts around hard forks and value of classic versus new. Zoe, you want to answer on hard forks? No. So hard forks is basically when miners don't agree on how to mine a coin like Bitcoin, then they can split, and that's how Bitcoin and Bitcoin Cash became, because they changed the software and they don't agree on the same changes of the software. So another blockchain becomes a reality. I think we're running out of time, so I think it's a bit hard to talk about value of forks because that's more speculative. But generally, every cryptocurrency has its own value, and you should do your own research, or happy to send you our eToro's research. And from Stefan Zaramba, and that will be the last question. As cryptocurrency become more prevalent, do you believe that currency will move toward one type of cryptocurrency, such as Bitcoin? Zoe, are we heading towards a one cryptocurrency world?
So my area is technology rather than currency, and I would be really interested to discuss the idea of scarcity with you, because that was the one area that I didn't quite get. If you can just keep creating new currencies, is there true scarcity?
Okay, Herve?
Yeah, so I see currencies like languages. For me, having one currency, it would be a little bit like saying, is the English language is going to take over the world, or the Chinese language is going to be, are we all going to speak Chinese in 20 years? The reality is that, currencies are a form of affinity. I think, now everybody speaks English. That doesn't mean that you don't speak your local, national language. And, I believe that there's 1,500 currencies in the world. There's going to be more down the road. And I don't think it's going to be a winner take all. However, in certain categories, I believe that, for example, store of value, Bitcoin will remain, one of the top contenders. Ethereum has a very good start, but, it might be challenged by others down the road. And I think the process is going to be about the scalability. A lot of currencies have great white papers and great ideas, but it's like a little bit you can see good boats when they're in the oceans. Right now, everybody's at the port and looking at their boat and saying we're going to go to New York to London without any issues. But at the end, that's the scalability, which have issues of hard forks, has issues of governance, is going to be. So to summarize, I believe that there's going to be as many currencies as form of language and as affinity. But I believe that in 7 years down the road, which by the way I see mass adoption of cryptocurrency in 15 years, we're at year number 8. Let's keep in mind that it took 50 years for credit cards.
Wait, this is also your summary, Herve. So let's do a summary and wrap up. So you got your one paragraph to summarize the entire last 45 minutes.
Okay.
Go.
Okay. So what was okay. So I believe that, you know, currencies is going to be a form of language, and that, you know, there's going to be as many currencies as languages. So, you know, at the end, I believe that the growth of cryptocurrency is not going to be simply due to, you know, the blockchain and the technology, which is obviously, you know, a very important path, but about the issues of fiat currency itself. For entire population, and I know this well because my mother's from Venezuela, and I saw an economy who has the largest oil reserve in the world collapse in a matter of 20 years with 4,000% inflation last year, and, you know, around probably 10,000% this year is predicted. So if the #1 country with the largest oil reserves in the world has collapsed with a useless currency, I believe that it can happen to other countries as well. You know, and that might arrive very quickly. I think that countries and even states, frankly, even US states, might say, hey, we don't want to have our, you know, the issues of having, you know, the US dollars. We might want to have our own cryptocurrency with our own governments without having to rely on federal governments. And, you know, we've seen domino effects happening year over year in, you know, different times in the world. And I believe that the next domino effects that could happen would be in currencies itself. And if this happens and you have millions of people opting out of the system, they will find, you know, refuge in a plan B, and that plan B will be cryptocurrencies.
Perfect. Zoe, couple of last words.
So I think that it's quite clear, like across the whole range of technology and currency, that there's a lot of opportunity here, and we really are at a point where we can't predict the future. I thought it was very interesting what Hervé said there about future disruptions of cryptocurrency. So it's a very exciting time to be, and I think to some extent we have to watch and wait and see what happens.
Perfect. So I'll summarize. Thank you, everyone. Thank you, YPO, for joining this. I have to say, you know, this was a bit of an echo chamber because we're all here enthusiasts, me and Hervé, obviously, of cryptocurrencies. I truly believe this is a game changer of technology in the entire financial ecosystem, and highly recommend for people to do more research, to learn more, and to explore owning their own cryptocurrencies and experiment with this technology, which is as big as the internet. So thank you very much, and thank you the lovely team from the YPO that helped us organize this.